Hey, how's it going? David Diddy here from Lakefront Advisors. I want to make this video to talk about the 14-day rule. Now, we all have to pay taxes. I'm all about paying your fair share of taxes. I firmly believe it. I'm not about tax evasion, but I am all about how do you maximize through legal action, right? How do you maximize or minimize your tax exposure, right? Maximize your tax efficiency. And one of the ways you can do that, and maybe you didn't know about it, but I want to share this quick strategy with you. It's called the 14-day rule or the Augusta Rule. The actual code within the IRS code, it's got different wording, right? But in kind of layman's speak, it's called the 14-day rule or the Augusta Rule. And what that is basically you can rent out, say your home, you can rent out your property for up to 14 days a year and not have to claim the income. Now, why is that? Why do you have to do that? Well, if you know about Augusta, Georgia, it's where the Masters tournament, golf tournament's held. And there wasn't enough hotels to house all of the people that were going to come to watch the tournament. And so they had to come up with a way to have housing have accommodations for all these people. And this is where they came up with the Augusta Rule. So now, during the time, those people locally there, during the time that the Masters tournament, it gave them the incentive they can rent out their property, but they didn't have to claim the income, right? And so it was a win-win scenario. They could make some money, didn't have to claim the income, and now there's enough accommodations for everybody who wanted to go to the tournament. The good part for you as a small business owner is that you can still capitalize on the 14-day rule. And no, you don't have to necessarily rent out your house on Airbnb or have other people sleep in your bed or stay at your place. But what you can do, and what a lot of people do across the country, and we work with small businesses to do it, obviously everything's got to be legal, moral, and ethical, and you got to do it for business purposes. But would it make sense for your business to have business meetings? Maybe you have you're having meetings with your board of directors. You have your sales staff over for a meeting at your house. Having meetings with your lawyers, meetings with your accountants, whatever it might be. There's a variety of different meetings that you can hold, but the way that you can leverage the 14-day rule for your business is that you can, obviously you have to document everything. You got to say what the meeting was, what it was all about, but you can now rent your home personally, rent your home to your business. Then you can take your business and you can go out, maybe call up a hotel and say, hey, I need a room for this meeting. This is how many people that I have. I need audio and video equipment. What would that run me? You can run some comps that way. You can run some comps, price comparisons on, say, Airbnb. That, hey, if I was going to rent out daily a home like same size as yours, what it might cost. Then if you can get some reasonable comps, now you know what you personally can charge your business. So now you can charge, say it's $500, $500 a day for that meeting. You can charge your business, you personally, your business will pay you $500. It's an expense, a business expense now, and now you don't have to claim that amount as income. Now, depending on what the size of the meeting is and what you got going on, would be maybe what the cost difference is. You can, like I said, the examples that I've already mentioned, but also it could be maybe you're doing production and you're recording videos at your house, or we've had it where people have had other companies come and they've got beautiful properties and they want to use their property for production, or you're going to make a video for your business and you need to use your property as the studio. You can talk to other studios in town, say, hey, if I was going to rent out your studio for this amount of time, what would that cost me? If you can get what those comps are, we've had people that, depending on the project, and every situation is different, and every part of the world is different, right? Comps are different, but we've had people charge for some production for $4,000 a day, all the way up to like five figures getting up there a day. But that was a house in California, and it was really nice, and it was insane. But it's all different. But that being said, the 14-day rule is something that if you're not already utilizing it, you can definitely utilize it. as part of any tax plan, like the tax plans we put together for our clients. If they're not already utilizing it, it's an essential part of the tax plan that we use, that we add to it if they're not already doing it. So if you're not using the 14-day rule, the Augusta rule, definitely look into it. Talk to your accountant, talk to your tax attorney, talk to your tax planner, and ask them about it if you're not already utilizing it. They should know what it is. They should know how to implement the strategy properly and legally. Ready? Remember, everything's got to be moral, ethical, and legal. So they should know how to document it all. They should know what the rule is, how to document it, how to implement it for you in your business. Hope this information helps. If you're not utilizing the strategy, definitely check it out, and we'll see you in the next video.